Let's move on to another market conversation now. Rupal Agarwal, Senior Research Analyst, Asia Quantitative Strategy at Bernstein, joins us now to give us her view on how things are shaping up. Rupal, thanks a lot for joining in. Appreciate your time here on CNBC TV18. I was at the Vibrant Gujarat Summit for the last few days, and I got a very positive sentiment on the Indian markets, specifically from a lot of foreign investors, saying that the growth in India is unlike what we're seeing with our peers. Not just that, but the demography, right? How young our demography is, that's really helping in terms of consumption picking up in a big way. How are you feeling about India now, and what are the big trends that you're noticing in 2024?
Thank you so much for having me. So I think for this year, we are actually starting with a slightly more moderate view on India. A lot of these things that you just spoke about is not new, right? These are, in fact, some of the reasons that we've seen this massive foreign inflow last year. And in fact, if you look at the total institutional flow that India got, it was the highest ever from 2007. So I think a lot of that is in the prices to a large extent. And hence, the way that we're looking at the market this year, it's going to be a moderate year. A lot of the support that was there for the market is essentially, fading away. It's not negative, but it's fading away. Whether you look at earnings upgrades, whether you look at flow, whether you look at this big disconnect that the valuations are right now having with the bond yields. So I think the rate cut wagers, in my view, has gone a little too ahead of its time, and that needs to be recalibrated.
Okay, all right. Hi, Rupal. Good morning and good to see you in. Rupal, what's the view, though, globally? Chinese economy continues to struggle, and India has obviously been benefiting because the +1 trade has been working out. But everything's good at a price, right? Do you expect more money to start flowing towards China rather than India?
We are expecting a China rebound this year. Whether that's already playing out in terms of investor money flow, not necessarily. We've definitely seen a bottoming out of outflows from China, which was actually extreme last year. So there are things which are at inflection point, I would say. And based on some of the recent conversations that we've had, some of the global investors have been trimming down their extremely overweight position in India, slightly adding to China. But we've not come across yet too many investors who would be looking at an underweight India. So I think that's where we are heading.
Interesting you mentioned that, Rupal. So I guess what you're suggesting is that a bit of a lighten up on India, get back into China trade, that perhaps could start. But, let me try and play the devil's advocate here. A lot of people on the fundamental side argue that that earnings are still coming in, and then, we're expecting a pretty market favorable election result, if I could call it that. Any downside risks to your view, the call of a moderate year on India? What could be the caveats here?
I think the caveat here is essentially that there is, of course, a very strong momentum in the market. In general, the investor sentiment is positive. So everything that I just spoke about in terms of earnings upgrades are peaking, flow is peaking, it's not negative, right? So that's, of course, the downside. I think the other thing is, and we mentioned this in our report as well, that equity risk premium in India still remains very low. While we expect that to move higher, it's not yet bottomed out. So I think that still remains a key support for the market. And that's one of the reasons we are taking this approach that, okay, it's okay to actually chase momentum names. Some of the names that have done well last year could actually continue to do well this year as well. Especially if you're, getting into names at this point, I would still recommend to be more cautious around valuations. But at the same time, I think there is a need to add a little bit more quality names, back to the market or back to the portfolio, because what we saw last year was this massive junk rally that happened between March and December, and I don't think that's sustainable.
Okay, so when you say add a little more quality names, right, I'm sure you're talking about adding large caps to your portfolio, but what is the sectoral preference now? Because we're seeing some signs of revival in the IT space, although the managements are still quite cautious, might I add. But how are you positioned here in IT versus banks? What's your call?
Yeah, so I think tech features reasonably well in our buy recommendations. And I think one of the bigger reasons is that the earnings downgrades bottomed out for tech, and it's still in that recovery phase, which is actually quite, it's standing out for tech, because if you look at some of the other sectors, the upgrades have peaked. So, clearly the momentum is fading. So tech is fine for us. I think consumer discretionary is the other sector where we are able to find momentum names, reasonably quality names, which are also reasonably valued. So that's another sector that features prominently. Financials, again, selectively, we are okay with financials. Honestly, there are not too many opportunities that one can get into at these valuations. Of course, it depends on everybody's valuation thresholds. The way that we've looked at it is we've ignored everything which is trading above +1 standard deviation to that 10-year average. So that becomes our benchmark.
Tell us more about that call, and being selective on financials. What's the pecking order? Will it be the private banks over the PSUs? The PSUs have given you the big money, or will it be some part of that could be towards NBFCs as well?
Actually, largely private banks. I'm not in favor of, in general, the PSU trade, which, I mean, in our world will basically be a proxy of the value trade. Value in India has never been so crowded, has never been so expensive. It's actually a 25-year high in terms of valuations as a portfolio. So we are not very positive on, in general, chasing everything which is PSU names. I mean, there could still be, of course, longer-term tailwinds, which will give us some momentum in these names in the short term. But I think we are still going to not chase too much of that.
Any other new thoughts in terms of sectors or themes for this year, Rupal? I mean, for instance, you're talking about value. I was just thinking of FMCG. The problem is it's neither value nor growth these days. So it's kind of somewhere in the middle and, therefore, a little unloved. But how would you look at that part of consumer or anything else that you're optimistic on for this year?
Yeah, so I think FMCG, again, we are not finding too many opportunities there. Last year, it was still, reasonably there in our portfolios. I think one of the bigger reasons, again, is valuations. And in fact, interestingly, consumer staples is one sector which is already, back into the earnings downgrades territory along with materials. So not very positive overall on the sector. Selectively, again, there could be few opportunities here and there, but in general, we're not very positive on staples.
Okay, just before we let you go, there is the vote on account that's coming up. And of course, ahead of the elections, there's no major expectation from this vote on account, but there'll be the big budget in July. And, trends look like the current government could sort of attain a third term. If that happens, then from an investor standpoint, from somebody who observes markets, what would your big expectation be this time around?
I think in terms of elections, I would say actually that was one of the big reasons why a lot of FIs came back very strongly. In fact, before the state election results, there was a lot of concerns that we were hearing from global investors because they were considering that, at the central election, there could be negative surprise. But the state election results, I think, sort of solidified, this sort of central results that we could expect. So not a lot of negative sentiment around that. Of course, that has been one of the bigger reasons why we are seeing a lot of the, the PSU names rally or, anything to do with China +1, the broader industrial theme. So I think a lot of that is basically running up because of the election positivity that everybody is now expecting. And that's one of the reasons we say that, it's just become too much of a crowded trade. We've never seen these kind of valuations. So one needs to just take a breather, right? There would be better entry points in some of these names. They're clearly longer-term tailwinds. So we don't deny that. We are still very positive on Indian markets in general from a longer-term perspective. But I think one needs to be a lot more selective in the short term.
Okay, all right, Rupal, appreciate you stopping by and filling us in with your views on the Indian markets. Structurally positive, but maybe in the near term, a bit of a risk owing to valuations.